Our Father, who art in heaven, hallowed be thy name. Thy kingdom come, thy will be done on earth as it is in heaven. Give us this day our daily bread, and forgive us our debts, as we forgive our debtors. Forgive our debtors as we forgive our debts. Forgive us our trespasses as we forgive our trespassors. Forgive our trespassers as we forgive our trespasses. Lead us not into temptation, but deliver us from evil. For thine is the kingdom and the power and the glory forever. Amen. Jesus, please forgive me for my mistakes. God, forgive me. I pray for a blessed, holy, and sacred day for all of life. May every heart and mind across the universe be filled with a lot of grace and love and light. And so it is. Thank you. Yeah. Let's get ready for work here. Oh, that actually worked out really nice. What? Huh. That honestly worked out very nicely. Oh, but you might do like a little critter Gabriel here. Well, pound dollar. On the pound dollar, I definitely saw strength on the buy. So there's more strength to go up. And even still, what am I saying here? Strength. Oh, but that's an exhaustion candle. Okay, that makes sense. Strength, weakness. Oh, weakness. Hmm. Right. The signals to this downside. So your strength is with shorts. There's more strength coming in that way. Mm. Come on, man. Dude. Come on. Yeah, that's the thing you gotta really take in here. How's that gonna work? Oh, you can definitely see a price retracement right here. Definitely. It's now been invalidated. Less volume as well. There you go. Still gotta wait for this regardless. Okay, that's done. Canada broke the box. You could be here for a while too. Yeah, by this standard, we're already now in a downtrend. Therefore, all of this stuff, and I mean, pretty obvious from the 4 hour too, right? So 4 hour, look at this. Already, what do you see is downtrend already. So the next setup is going to be here because this is the candle that broke the box. They can come back in to test the box. They can come back in to do all that stuff. Who knows? Who knows, right? Mm-hmm. Mm-hmm. That's why you wait for two. Mm-hmm. Yep. That's why you gotta wait. Gotta be patient. Gotta be patient. Price is sitting mainly above the point of control. There's not much more volume. It looks like an exhaustion candle. Who knows? But again, at that time frame, you don't want to be speculating. You want to use fundamental analysis as well. Just remember that. Always keep that in the back of your head, you know? Canada broke the box. previous point of control. Takes a while for that setup to form. It's not a bad. It's not like it's horrible, but it's certainly missing some pieces to it. Especially if we're saying like let's utilize the time, all the time frames, you know. Interesting. Yeah, the more that you have it like this, the more work it becomes after a while, you know. There's got to be a way to trade within the box. Yeah, but are you gonna wait like 3 hours for a box to form? You know, like that's a big ass question. Unless you see it like you take the right, maybe. Right, maybe, I don't know. Maybe. Unless you like make the box to the higher time frame and then use a lower time frame for like a specific entry. That's a possibility too. That's always a possibility. Yeah, because after a while, this becomes a mess. This honestly becomes a mess after a while. Right, are we still trading in these levels? That's a big question to ask. See, but that's also where you would apply that idea. Right. You would apply those levels here like this. Bingo. Right? You do something like that. And then you'd be like, oh, these are my levels right here. And then that's when you go down to the 1 hours for confirmation. And then the 15-minute would be for like taking the trade, right? So let's say if I would actually do this right here. Let's actually think about that for a second, right? Let's do that. Hypothetically. Yeah, we got weak volume here, stronger volume here. Okay, let's take the order. Let's go to market. Because we just saw the close. And the trade. Stop is going to be here. Take profit is going to be all the way down here. Let's just pretend. Because again, there's different ways to do this. Higher high, higher low, higher high. Yeah, you're not trying to do that, right? This is the current 1 hour is saying what? Higher high, higher low. Come on, son. That's why you got to look at that. Oh, okay. Okay, hold on a second. I think I see something here now. Okay, I think I see something that I didn't see before. Okay, that's good. That's good. That's really good. Yeah, that's actually kind of good, actually. Oh, that makes a lot more sense now. If I do it like that, yeah. It means I'd have to use the boxes and I'd have to use the channels then. Okay. Okay, that's not too bad. That's interesting. That's more interesting now. Now that's gotten a little bit more interesting. Right, right, right. Hmm. Right, and that's when you go down to the 2 hour, and then you're thinking, oh, okay, how am I going to trade this on the 2 hour? Higher highs, higher lows. Oh, shit, right. And then you take that idea here and you say, okay, this is the close above on the 30-minute. Yep. And then this is the bar. If you were to set a stop order right here. Stop order right here. Sorry. A long order right here. Through here. Back up into there. Oh, shit. That's an idea. That's an idea right there. That's not bad. That is not bad. That is not a bad idea. Right. You set your orders for the day and then that's it. Oh, that's interesting, man. That's real interesting. That's a very interesting. That's a very different way of seeing it now. Now I'm utilizing both time frames. now I'm using both time frames, and that's much better, right? So the overall structure is we're going down, but then if you go to here to the 2 hour, we see the uptrend is higher highs, higher lows. And then we go over here to the 30-minute where we execute from, and we're just going in and out for a bar or two on the major time frame trend, which is like 2-4, so like a couple of hours. That's something to think about. That is something to think about. Am I recording this? Yes, I am. Okay. Well, should have been recording this on my thing. All right. All right. So that's an interesting idea. It's a very interesting idea. Because this is taking forever. This is taking what, 4 days? 4 days in a 4-day period. I should be taking quite a few trades here in a 4-day period. So there's that. Right. It's going to be, so it should probably be between the 4 hour, the 1 hour, and the 15. The 4 hour, the 1 hour. Obviously, this is in trend to the upside. So you got to think about that. Okay. But now on the 15, on that 15-minute time frame, you're looking up. The same amount of volume. Okay. Yeah. I think this is it. I think, yep. I think that might be it. Because if the 4 hours providing the structure, the 4 hours providing the ranges, right? Think about that. 4 hours providing the ranges. The 1 hour is providing the major time frame trend. Right. And then the 15-minute is providing those like little tiny ass sniper entries, right? So let's say if I was wrong here, hypothetically, right? I'm going to go from this level to this level. That's basically what I would try to do, right? If I'm going to try to do this level to this level, that's 37 pips. Let's see right here. I would do, this is my level right here. This is my high right here. Okay. This is what I'm focused on. All right, let's go think about this. And then let's add another box out into here. Okay, and let's say, for example, hypothetically, parallel channel. There we go. I probably want my stop to be set up like right here. Okay, that's a 1 to 1.4. No good. E. That's why you would want to do something like that. You'd have to do something like a stop limit here or something. And then go up into the trend. That puts the odds significantly in my favor. Versus this, yeah, exactly. Okay, well, let's come back here tomorrow. Let's see what we got. Yeah, that's like fishing. Right, you're not going to be taking a trade any given minute. The 1 hour is telling me we're in an uptrend. That's pretty that's pretty easy right there. Yeah. So it's just basically applying the same concept but to the higher time frame, which I can do. I can totally deal with that one. That's pretty good actually. I can absolutely deal with that one. And then I would say too, like if that's the case, then the 1 hour is completely candle that breaks the box. I understand that. But here's what I'm saying. What if it's the 15-minute that does the thing? One, two, three. There you go. So you got about 8 minutes left. Do we have stronger volume here? No. Yeah, I think so. I think this could be a possibility. This could be a real possibility of a setup. Real possibility. Right, and then you're just in there. You know, that's the part right there. That is the part right there. That's more heavy use of technicals on all 3 time frames. Yeah, I think that's probably what it would be. It would be like the 4 hours. The 4 hours just draw the boxes and they tell us what the possible trend direction is, right? The 1 hour is going to tell us where we're coming from. Oh, well, you see, there's even decreasing volume right here. Look at this. Look on the close. Look on the close. So probably by the hour, you can see that it's going to close through. It's very, very possible. And if that's a possibility, then we think it's going to happen. It's going to go down. Right? You can come back in here. Look at this. Look at this. You come back in here. I don't know how much I necessarily believe in that, though. I don't know how much I believe in that concept too much, to be honest with you. Yeah, let's just assume that right there. Yeah. So let's assume that we're gonna probably somehow come back up into here, right? Like you can come back up into here, fill some of these orders, you know, probably even go as low as this and up here. But look at all that. You can totally get up in there. That's where price can come back into. And that's a trade right there. That's a trade setup right there, you know? Yeah, I would imagine. I would imagine that the lowest I'd go is probably like 15 minutes now at this stage. I think so. I personally think so. Yeah. Hmm. And at that point, you still got another hour here. You still got another 20 minutes, 19 minutes for the hour bar to close. And if that hour bar closes, oh shit, then if it closes below the point of control, we're good. If not, then we already know. Right now, the thing I gotta ask myself is like, am I okay with this? You know what I'm saying? It's 2 hours. You're waiting. You're waiting. You're waiting. You're waiting. 15-minute. There you go. Look at that. Hmm. Right, right, right. That's what you gotta ask yourself, man. Oh shit. Wait a second. Oh, right, right, right. Right, right, right. Okay, these are the levels. These are the levels of the 4 hours. So you just put that on there. Okay? You go down to the 1 hour. What's the trend? And then you go 15 minutes and you just trade from these levels, from these areas right here. Look. Well, shiver me timbers. Shiver my freaking timbers, bro. Hmm. Hmm. That I would say is the only concern, is making sure that we have enough time in here. But look at this. That's it. That could very well be it. That could very well, very well be it. It is. This is the candle. This is the box. This is the current box right here. Okay. That's the current box right there. These are the levels within the channel. Go down to the 1 hour. Where did we just come from? Oh, look at that. Strong volume right over here. Good. And where we're here, weak volume. Okay, we could be expecting a reversal. There we go. And that would fit. That would totally fit the 4 hour. That would fit the 1 hour. Right, and then you got the last 15 minutes right here. Okay, so you wouldn't trade anything until you actually close like above, right? And then you're coming back in here, for example, and you're waiting for a test back at the level. Okay, maybe. Oh, and it closed beyond this point of control as well, too. This is the point of control at the 15 minutes, so that's fine. I just wish that my R was a bit more mapped here, because that could be the start of the downtrend, because you've been trending up for a bit. Yeah, and then you apply the fundamental layer last. The research would be pretty quick with ChatGPT to figure out what's going on in this time frame period. And again, you're already in here for like 4 days. This is 4 days worth of data, right? You're not going to wait for everything, right? You're going to work your way back up to, and then you're going to trade down with. Right, so now we're here at the point of control. This is a very critical level. Oh, snap, crackle, and pop, baby. Snap, crackle, and pop. That's interesting, man. And then over here, same thing from level to level. That's the other one too. That is the other one too. Look at this. From level to level. That's it. That's all you're doing. From level to level. Weaker volume. Weak, strong. Enter. That's literally like 30 minutes worth of work. That's it right there. Yeah, that's it right there. That's what we want to do right there. Every time. Every time. That's interesting, man. That's major interesting. That is major interesting. Major interesting. Major interesting. Big levels. These are big levels. Right. There's so many different ways that you can do this. There's just so many different ways. Off a candle, off a, boxes. That's what makes this so unique. And you can still be right. You can still be seriously right. Higher high, higher low. Boom. Yep, you're in trend. You're in trend. Look at the very last candle. Look at the very last candle. You're in trend. You closed above this level, this area right here too. This one right here. Closed above, stronger volume, last two candles. That's basically it. This is candle one. This is candle two. It's candle one. Candle two. It's candle one. That's candle two, Gabe. Candle one and candle two. You know you're up in trend. You know you're up in trend right here. Go all the way down. Yep, exactly. Exactly, man. Exactly. You already know. You already know you're up in trend. Even here, this is a trend right there. Okay, it's just different ways of looking at it. It's just honestly different ways of looking at it. But I think I like this way better. Wait for that 1 hour to close. Got about 8 minutes. Yep, it's closing with more volume. If this thing closes with more volume, we should be all right. We could at least come back down here. This could be even like the first target right here. It's not bad. Not the worst thing in the world. Yep. Yeah, that's what I want to do, man. I want to go between these levels as quickly as possible. The more that I keep looking at it, the more I think it's either going to be the 4 hour, the 1 hour, the 15, or the 8 hour, the 2 hour, the 30. And I probably would go for like the 30. I probably would go for like the 30 to execute in the 2 hour. I don't know. I don't know about that. Yeah, but think about it. Like if you're going at that pace, then you're thinking about what? How are you retracing? How are you gonna retrace here? You gotta ask yourself that question. Very interesting stuff. Very, very interesting stuff here. Chinalytics. Where are we now? Where are we now? Where are we now? Yep. Okay, interesting. Interesting. 64%. 64%. Yep. Yep. Interesting. Oh, this is very interesting. Oh, there we go. There we go. It looks like we're doing it. It looks like we're doing it. Yeah, but that's the big question here. We gotta ask ourselves. We got 5 minutes left. Yeah, if we close through here, we should be fairly good. We should be all right if we close through here. Mm-hmm. Mm-hmm. Yeah, you could. I'm sure you could. But now the question remains: would you be doing something like this? Like where we do the halfway point? No. You just focus on going from one level to another. From one half to another. To the half of the half, to the point of control of the other. Like this. Like this, like this, like this, like this, like this. Look. Here to here. That'd probably be your move right there. And then you got here, more volume. To here. And then there you go. Mm-hmm. Yeah, obviously, you're not always gonna get it all the time, but okay, so then it still stands to reason then that it's just literally these levels right here. These are the levels. These are the levels. That's very nice to know, actually. That's actually really nice to know. If those are the levels within that 8-hour block, for example, here too. Okay. If these are the levels, right? Let's do this. There we go. 8-hour, 2-hour, very simple. We're in trend still. Right, you could say it's a higher low, up, higher high. Okay, well, you're technically then in range then in that case. But if you're going from here, candle to candle, if this was your high and this was your low of your last 2 candles, here you just broke through. This is your high, this is your low. You just broke through the candle. And then what? Go down to the 30. Mm-hmm. That's really all it is. You're just holding it longer. It's really all that is. Hmm. Hmm. Yeah, you see, that's the thing. Mm. You could even be coming back into the retest, right? And then you come back down. That's true too. Yep. There you go. We close with more volume here. Okay. We got to finish the work today. Daughter's coming over today. We got to finish our work. Let's go. Yeah. And then by the time you get out the trade, you want to be thinking, okay, let's let's make sure we just hold this, right? We could be coming back down into here. Could very much be coming back down into here. Make sure we hold this. Mm-hmm. Yep. Yep. Gotta make sure you hold it. Oh, right. Right. You're probably even looking at the main box's point of control too. Probably. Probably. Oh. Mm-hmm. Yeah. Look at the point of control or the main box. That's pretty much it. And then you're thinking, okay, well, if that's the case, then let's trade it. Let's trade it from here down here, you know? That's still gonna take time though. That is still gonna take time. Hmm. Mm-hmm. Yeah, you're not going to be there for all of that stuff, right? So I'm not going to be there for all of those trades. I'm not going to be there for all those setups. That's you know, that's wishful thinking. But what can I say? I think it's more realistic to do something like how I have here on the 4 hour, 1 hour 15. Because if I'm giving myself like 4 hours, to trade the markets, I'm basically just going to do a scan of my charts and then just say, basically, I want to trade from here. Here I want to trade from. I want to trade from here. I want to trade from here. These are my areas, basically. This is my bread and butter. I'm trading from here to here, here to here, here to here. And that's basically what I see from the higher time frame from the box. And it's the same thing over and over and over again. It's the same thing over and over. This is not enough time in data for that kind of a setup. And after this, I'm just thinking go back down. You're right. You're going to go into this area right here. You're going to go into this area right here. Very likely. Very, very likely. Look, you're already taking out this area, right? Come back down into here, take this out. And let's see what happens. The major move is down in trend. This is pretty obvious. More volume come down. So let's see. Let's see what happens here. And then we're going on to 1 hour. By the time we get over to here, I'm thinking automatically, okay, this is not the signal, right? This is not the right move. 1 hour, wait for the 1 hour to close, right? That's a big one too. Always wait for that 1 hour to close. Always wait for that 1 hour to close at this particular level. At this particular level. Always wait for that 1 hour to close at that particular level. So it's really, then this would be irrelevant. This would be irrelevant unless you're looking at it for reversals, which I could see that being the case, right? Like over here, I could see that being the case. And then if I go here, yep, I could see that being the case too. Like right over here. If I were to do this box right here. Right? And we still broke through anyway. So check this out over here. That's covering it. Come on. This is covering this, right? This breaks out. This bullish candle right here breaks out with stronger volume. That's stronger volume. So what am I thinking? I'm thinking then you take this back up to the upside. That's a weak risk reward ratio. But what do you see? That's also in the main area in the point of control at this specific level. Look at that. And even still, at this specific level, there's this candle right over here that breaks more volume. Right, that's where you take it bar by bar. That's where you'd have to take it bar by bar. Less volume, more volume, test. Okay, yep. So you definitely want to make sure your safest areas are to take it from here and here. That's it. Oh, and then oh my God, there's so much overlap. It's insane. There's so much overlap. It's insane. Now it's all clicking. Oh my God. It's the same. It's expectancy basically. And I think I have my answer here. I think now I officially have my answer. And it's just a component of making sure that you have enough space in between to justify getting the set, right? Like this is a poor R. This is a very poor R. 1 to 1.2, terrible. Okay, terrible. This is much better. 1 to 3. That's what we're talking about here. And that's what? 30 minutes of work right there. 30 minutes of work to go from here to here. That's brilliant. That's genius. That's what we kind of want to do here. That's basically what we want to do here. Basically what we want to do here. Yep. That's it, man. That's it. That's what we want to do. And so basically the idea is, how can I get from here to here in as little time as possible and make sure that that my R is good to go, you know? Like, obviously I'm not going to take a trade if it's something like this. I want to try to do at least 2 levels. At least 2 levels. And so now this is the challenge. Now this is the part that I'm asking myself. How do I navigate this? And oh, there we go. You just hit take profit. Just hit take profit right there. That's take profit right there. And these are very simple levels. These are very, very simple levels. And the 4 hour would tell me. The 4 hour is telling me exactly where we are in relation to everything. So the 1 week provides the structure in this example. The 4 hour tells me where we're trending for this specific session. So I already know that by the time I show up at 7 o'clock, I can say more likely, okay, we're already here. This is candle 1, this is candle 2, and then this is our trade setup. So I go down to the 15-minute, and then I just stock. That's it. And by this point, I mean, you're already going to the levels. Let's see, same thing for Euro JPY, right? So that's the idea. We want to be in and out as fast as possible. That's the thing. I want to be in and out as fast as possible. Always want to be in and out of the markets as fast as I possibly can. And the 8 hour is also another good point too. Because look, if I take it from this specific level and I just write it up, there we go. That's a 1, 2, 3. That's a 1, 2, 3, 4 hours of work. 4 hours of just holding the trade. And that's what I'm trying to do here. That's what I'm trying to accomplish ultimately. Right? Better if we can get something like this, right? Where we got more volume coming in. And I could take this at this level right here. And then that's it. 1 to 2. Which might honestly be even better. If I could just do that more often, that would probably be even better. That probably would be even better, honestly. So that means if I was going to do that, if I was to do that, I would need to wait for confirmation on that lower time frame, on the higher time frame, which you don't get in this case. Right? You're not getting it in this case. But you are getting it here. So again, that's the risk, right? But then again, that's also where the 2 hour is just showing you what is the trend. The trend is going bar by bar. The trend is going bar by bar. This closed above more volume. So that's telling you, yeah, we're going for more. But then you got this, you have to wait now for the price then to come back down then. Because that's not so accurate, right? And now the same thing here too. I gotta wait 2 hours now. I gotta wait for the close of this candle here to confirm what are we trying to do. Versus if I was already here, I already know. I would already know. Yep. That's the trick. That's the trick here. That's the thing. And you can still tell too from the lower time frames as well. Where have you been? Where are you going? Yep. Okay, that could be a stop out right there. That's fine too. Because right now we're just playing. We're just thinking about it. But I do like that significantly better though. Like if I had to do it like this, I like that significantly better because now I'm utilizing more time frames for sure. And I can get in between and I can say, okay, let's trade from here to here. It's the same idea. It's the same idea of trading from here to here. Same idea. Same idea. And that's the same thing for here too. 4 hour. We already know. So it's going to come down to 3 time frames for me. Execution time frame as well. You know, am I going to be here at the desk? Like you got to ask yourself that. You see, you got to ask yourself that question. Am I going to be here at the desk waiting? Probably not, right? This is now significantly stronger bullish engulfing. So we should expect this thing to go back up to this next level, right? So if let's say I was here, just say hypothetical, my next target is up here. That's it. And that would be technically like the R, right? But I'm not going to do that long term. What I think I'm going to do is if I want to be able to really hit my targets, my financial targets, my financial objectives with trading, I think it would be closer to probably executing off of the 30-minute time frame. Probably over the 4 hour, the 1 hour, the 15 in this specific model. I think it would be in this specific model. So let's see here. Because the thing is, when you're trading, what I realize is you need enough opportunity. You need enough trades. And I learned this from that trading psychologist, Van Tharp. You need enough trades. It doesn't matter if you have, let's say, you know, a 1-to-18 risk reward ratio, but you only do that 10 times out of 100. You can't position size aggressively. So I want to make sure I position size as aggressively as possible. And I think the way that I do that is by having something where I can see enough trades in a given time period, right? So let's say if I'm trading here to here, this was a trade that took, this is a trade that took me 17 hours. 17 hours, if I would have gotten that, it would have gotten me 17 hours to get there, right? So that's pretty good. That's pretty damn good. I was waiting for this one to build for what? 13 hours. That's pretty good. That is really good. And then over here, what else we got? Yeah, that's pretty good. That's pretty good. So we need enough time. We need enough time for the setup to, number one, build, and then enough time for the setup to complete or the trade to see its way through. And so we also have to then consider the macroeconomics, like what's going on in this time period, to be able to say, okay, this is where we're going with the price. But otherwise, this is what we're looking at here. Right. And then the higher up the time frame you go to, like the 8 hour, the 2 hour, the 30. Oh, right. The higher up you go in the time frame with the 8 hour, the 2 hour, the 30, the higher you'll realize, oh yeah, wait a second. This is supporting the fundamentals, the bias, all that stuff. So as long as I can get a certain amount of trades in a given time period, that's going to be the edge. That's going to be the edge case for me. So that's what I'm now debating between, okay, is it going to be like this kind of a setup where I take like the smallest R multiples, or is it going to be this kind of thing where I just literally wait between these specific levels at a lower time frame? Or is it going to be something like this where I'm like even smaller, you know? That's what I'm asking myself here. But I think longer term, executing off of the 30-minute time frame might honestly be better, to be honest. And yes, I may have to look through the trades, through the markets a little bit more, But I don't think that's such a bad thing if I literally just have to wait for the candle to close on a 30-minute time frame, you know? Like, as long as I don't have to sit there all day, or like, you know, this should be, yep, should be enough. This should be enough. Should be enough. Yep, weaker volume, higher volume. That's the first signal indicator right there. So then let's look at that. Could have just easily set up in here. Done. Could have gotten that run right there. Done. Interesting. That's very interesting now. Now that's interesting. Right. After you see that 15-minute. Yep. That's it. That's it right there. Well, I'll be. Right. Look at that. That's another one too. That's another way of seeing it too. So if I'm in here and I literally just wait. I literally just wait. Okay, just imagine this for a second. Literally just wait. Boom. Yep, retest 618. And then eventually we get up in there. That's it. Same thing here too. Same freaking thing here. Yep. That's why it's 618 to 1618. From the edges. Oh shit. Yes, I think we're getting it now. I think we're getting it now, baby. Yes. I think we're getting it now. Yep. And then we get that 1 to 3.5. Oh, look at that. Look at that. Huh. Right. And that's why you would trade it like this at 618. That's why you would do that. Okay. All right. Now that's starting to make more sense. Okay. So in order to get enough trading frequency, so I can do these setups like this, right? But you're going to need a lot more fundamentals. There's going to be a lot more fundamental drivers at the higher time frames. And it's going to take forever to get the setup going, right? So setups and entries are not so important. The exits are most important. But what I can see here is that we have the range, right? We were in between price from here, from this side and this side, right? So let's see here. And let's see here, like this was the range, right? And we broke out of that range, obviously, right? Because this is where price is right now. So very simple is we should expect maybe the price to come back up into here at some point and then come back down, right? Maybe. Or maybe fundamental drivers change that. Who knows? I don't know. But what we can see is it looks like, yeah, it's getting pretty nasty right now. It looks like it's getting pretty nasty, right? But you're not going to say, oh, I'm going to wait for the high over here and the high over and the low over here to then take the trade. That's like 52 days. No, you're going to trade in between. You're going to trade closest to the right now. And that's why we use the boxes that we use, because they're telling us the range and they're telling us the setup and the breakout. So we mark the boxes The ranges on the higher time frames, we come down here on the lower. Okay, we see the major trend. The major trend is going up from these specific levels. That's why we have to use now the second layer. So we have to use the boxes at the first layer, the channels, and then we have to trade. We have to trade in the direction of wherever those candles are going. Okay, gotta trade in the direction of where those candles are going. Then we come down here into the 15-minute. It's okay if I get stopped out. I don't give a shit. Okay, so we come down here now into this 15-minute, and we're looking for something like this. We are looking for something like this, where our trade is going to be here, done, and we're going to go for all of this. So that's a 1 to 4. 1 to 4. Let's assume we go here to the entry of this, to the exit of this. That's a 1 to 3. That's a 1 to. That's pretty clean. That's clean right there. That's clean money right there. Clean money, right? That's 4 hours worth of work. All we have to do is just wait for the price to come into here. That's all we got to do. Wait for the price to come into here. We do the same idea here. I don't think then we need the boxes, to be honest. I don't think we need the boxes. I don't think we need the box. This is higher volume. This is higher volume for sure. So it's telling us probably, hey, you're going back up in trend. Okay, fine. Okay, fine. No problem. But then if not, what you gonna do? What you gonna do? If this closes out with weak volume relative to this, then this is not, this is definitely a tricky area right here where now price is like figuring out, or the market is figuring out where do we want to go. That's fine. That's totally fine. I'm good with that. I'm totally good with that. But just look at this. I could be waiting days for this to break out. Not going to hit my R objective at this rate. But if let's say I go here to the 30, I got all this space here too. I got all this space here to trade at the lower time frames. That's what we want to make sure we have the boxes so we know our ranges here. And once we get down to the 2 hour, we could be thinking, oh, okay, well, where is the price here? Where does price want to go here? Okay, well, if price wants to go here, fine, no problem. I'm thinking, okay, maybe it's going to be a false break. Maybe we're going to tap into a specific area right here, which is, there you go. You're tapping into 618 of that previous area, which is right over here. Okay. So this is from a previous setup at the higher time frame of the 8 hour. Okay. Notice how we just kept closing without any type of a retest. So that's already telling us, oh, there's something up here. So if we close even above this level too, with stronger volume, that's telling us what? Probably going to go reverse. Okay. Well, then still, regardless, we go up with the time frame trend. It's the major time frame. This is the major time frame. The 2 hours, the major time frame. The 8 hour forms the structure. So the highest time frame always forms the structure. The 2 hour always forms the major trend. And then the 30 is where we just find the right place to execute from. That's all we're doing. That's all we're doing. And these levels, I mean, look at how much we could have traded in between these levels alone, right? That's 2 days worth of trading right there. That's 2 days worth of trading. We could have done that. We could have hit something, off of these 2 days worth of trading. And if I were to put up the other channels up here at this level, I could totally see how we could have hit even a couple of trades at the 30-minute. Let's go here. Let's go here. Let's go with these levels right here. Yep. That's it, man. That's it, baby. Yes. Yep. That's it. That's it. Those would have been the levels. You come right back into here. Whew. That's it. That would have been it. All right. So that's pretty good. So that's where we have to make sure we use the tools that we have. And I would not use any lagging indicators. Never. That's a fucking death trap. I would only use the leading indicators. Leading indicators are telling me what? Your major trend is down. Okay, fine, no problem. No problem. But where are we right now? Yeah, we're not at the highest point right here, right? We got to think. What could happen potentially? If we break out of here with strong volume, we're going to go back up, and we're going to go back up to here, right? We could do something like this, right? We could see something like that. Possible, very possible. But we're not going to assume at this level. We're not going to assume here. We're just going to literally assume here. We're going to assume what's going on here. What's going on here? What's going on here? This was the trend to the upside. Don't even need all that extra stuff, right? Don't even need that extra stuff. Just literally think from here to here. From here to here. And then we come down, and then we just trade it. You just trade it from this level to this level. Like that's it. Just trade from this level to this level. Okay? That's all we got to do. That's all we got to do. But we're not going to take the entry just yet. Why? Because the 2 hour has not closed. The 2 hour has not closed. And if you think about this, these are very sensitive areas. These are very, very sensitive areas. So if you're saying we're going to take that and we have enough supporting volume, then better believe that you're going to have enough players to come in and push price in that given direction. You know, we close above here right now, boom, we can go right back up. We can go right back up into here, and there's a whole bunch of friction points. So got to be very mindful of that. But right now here, we're at the median. We're at the median for this specific level, for this specific set of data, or where price is currently to the right. Yes, you're looking at stuff to the left, but nowhere near as much as what's going on in this current area, in this current given session of trade, right? So we have to fill at certain prices, especially where there was such a strong amount of like capitulation, right? Strong points of selling. How are we going to recover from that? Got to recover from that. All right, next. Yep. So I'm going to be waiting. Just like this right here. You got to be waiting for this specific bar close on the 2 hour. Could you say, oh, I'm just going to be aggressive and just let it ride and go enter in on the 30-minute right now because I see strong volume? Sure. If you want to do that. But, you know, you're going to be riding dirty. We don't want to ride dirty. We want to think, how can I be in and out with this kind of an R multiple? And how can I make sure that I get positive expectancy? That's it. And then this 4 hour is just like really, it's just nicely telling me this, right? I got stopped out here. Fine, no problem. But just think about that. There's less volume already coming back in here. There's already less volume coming back in now. That's a strong test. That's a strong wick rejection. Okay, fine. Now what we're going to do? We're going to still say, hey, let's take this to the downside still regardless. Let's still take this to the downside regardless. And if we close here, if we close with this candle, more volume below 618, oh, very likely, we're going to come and make our way back down. Very likely. And if we're going to come all the way down here and take this out, yeah, that's good. That's good stuff. But it just shows me, like, yeah, trade from these levels. Just trade from these levels. Very simple. And if I have the 8 hour, 2 hour 30 versus the 4 hour, 1 hour 15, that's the difference in frequency. But now the question is, can I match that frequency and still be able to hold the size that I'm intending to hold? And like, I get it. Like, the FX market moves $7 to $9 trillion a day. Not just one specific instrument, right? Not one specific pair, but I'm talking about like the entire FX. So if that's true, that it moves 7 to 9 trillion, you know, you're full of shit. Your ego is through the roof if you think, you know, your 100,000, your 100K account is gonna move the market. Like, come on, like, let's be for real. So, but what we need to see is, like, if I were to grow a significant account size, like to $1 billion, that means 1% could be like, you know, 50 million or something, you know, or like 10 million or something like this. If I have 500 million, 500 million, 10%, yeah. So if I had $1 billion, it'll be 10%, 100, 10 million, 10 million, 10 million, 1%, 10 million. So think about that. If you're moving 10 million on one trade, can we comfortably get into a position and get in and out of a position as low as the 15-minute time frame? That I don't know. I'm not there yet. So that's what I'm thinking about. But either which way, I got to treat it like I'm still trading at that account size. That's what I'm thinking about. That's what I'm thinking about right now. And I know that these are a lot of thoughts, really fast thoughts. But this is what I'm seeing, you know? This is what I'm seeing. So I'm just thinking to myself, how am I going to play this in true form, real life, like this, right? So that's why I have to be thinking constantly all the time like this. Got to be thinking like this all the time. Because if this is true like this, I mean, easy day, right? Easy day. That's easy day. Look at this. 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 Easy day. Easy day. Easy day. Easy freaking day. Easy freaking day. Easy freaking day. That's money right there. That's your money right there. That's your money right there, baby. Come on now. That's your money right there. Get your money. Get your money right there. Get your money right there. Same thing here. Same thing here. Look at this. Look at this. Look at this. Look at this. Strong volume to the upside. Look at that. Look at that. Yes, you do want to move your stop into profit. So once you know higher highs, you closed above this high. Once you know you closed above here, okay? Once you know you closed above, that's it. You got to move your stop. Got to move that stop. Stop into profit, right? So you never want to lose 1 hour or more, less than 1 hour. Risk less than 1 hour. Risk less than 1 hour. Yeah, but that's good. That's good. Not bad. Not bad. Not bad. Not bad for that work. Not bad for that work. Right. Now you just got to ask yourself, are you willing to do that? Are you willing to do that? Are you willing to do that? It's the same setup over and over again. Are you willing? And that's the key right there. That's the key right there. Are you willing? Because this is going to be weak volume right here. If we don't see anything major, this is weak volume right here. Okay? But already notice here too, like at this point of control, the volume was already weak. The volume was already weak. So it's already telling us, hey, you know, the volume was strong to the downside. The volume was weak to the upside. Volume strong to the downside. Volume weak to the upside. So what we're gonna do? We're gonna wait. Gotta have that real good volume here. And that means the break of the candle, the break over here, is gonna tell us everything. The break over here is gonna tell us everything we need to know. It's gonna be pretty simple. It's gonna be real simple after that. Real simple after that. So we're gonna set a little alert here. Once we're bar closed, okay. Outside the rectangle, yep. Done. And now let's go away. Let's go away, because I could be here watching this all day. I could be here watching this all freaking day. Right? All right. And thank you, God. Thank you, Mother Earth. Thank you, Universe. Thank you, Mighty I Am Presence. Thank you, Great Divine Spirit Team. Thank you, Subconscious Mind. Thank you, Great White Brotherhood of the highest vibrational frequency and consciousness who love and support us unconditionally. And notice how there's more like price is not sure where to go, which tells me that this is the median point, or this is the mean of this area. This is definitely the mean, and price does not know where it wants to go right now. So we're gonna have to wait, and that's 2 hours already. That's already a 2-hour wait. Notice how if it's very definitive, yep, we're gonna go and trend really fast. You're gonna go and trend real fast. Like from here to here, that's already 4 hours. And now from here to here, that's already two almost 3 hours. So price doesn't know where it wants to go right now. Market doesn't know where it wants to go right now, or is pretending it doesn't want to know where it wants to go. So we just gotta wait right now. And if we get to close in the next 2 minutes with positive volume, with stronger volume than over here, then yeah, I'm going to take it. 2.78K. $2.78K. 2.32. So the number to beat is 2.78. 2.78K. We do that and should be all right. Should be all right. Should be all right. All right, thank you, God, for the smoothie. Bless this holy smoothie for my grace and eyes. Good. May the smoothie hydrate and nourish me on deep soul level, and so it is, and so it is, and so it is. Oh. The work for today. The work for today is to finish the books. And let's get to work. Nope. We could do this for a while. So I gotta just be patient, wait for it to close to the upside or to the downside. That's basically it. You can also see too, like if this candle closes bearish with more volume, that's already going to tell you that it's going to likely go down. And this is the part about trading that requires a lot of patience. And that's why I gotta ask myself, am I really gonna sit here and wait? No, I'm not. It's gotta come between the specific time, and that's the 7 hours. That's from 7 to 11. And that's what I would do, is just trade from that candle. Yep. Mm-hmm. Yeah, you see, most people are going to be like, oh, more volume over here. Let's trade that. No, you got to wait. You got to wait, because that's the 30-minute time frame. Look at the 2 hour. Look what's happening on the 2 hour. All right? You got to think about that. Quite a few things to take in mind. And look at this volume over here. You're not going to see anything for at least 13 minutes. You're going to wait for 13 minutes. Same thing. All right. Gotta wait. Gotta wait. And that's the process. That is a process to wait. So, regardless, it seems like still at this point, you want to set up your charts. And this is like common sense at this point for me. Set up the charts, Gabe. Walk away. Do your work. Make your little short skits or whatever. Do your holy work. And then when it's time to show up and do the work, take the trade, show up and do the trade. That's it. That's really all it is. Show up, do the trade. That's it. That's it. All right? So now if we get a good close over here, strong volume, yeah, maybe. Maybe we get something here. I'd still say, though, that we're looking to get into here. This is like that sticky area right here. So we're looking to get probably up into here. 1 to 3 minimum. All right, we got a couple of significant levels. And this is what this is telling me very simply. Because look, the longer that you're in this range, the longer that tells me there is a chop between these levels. And look at all these wicks. Look at all these crazy ass wicks. Look at all these crazy ass wicks. You for real? For real? Are you fucking are you crazy? Are you kidding me? Are you kidding me? Are you kidding me? So that's for sure tells me that my technical analysis, there is something there with that. And so we got that right. And I just gotta ask myself, like, just gotta be patient here. Am I willing to be patient? Right? Okay, we're gonna get stopped out. That's fine. That's why you also want to go for asymmetric positions. It's okay to be wrong. It's okay. It's okay. We don't need to be right. We don't need to be right all the time. We just have to be right enough. Just have to be right enough. So I'm going to be between either 8 hour, 2 hour 30 or 4 hour, 1 hour 15. 2, 4, 2 times. Well, obviously 3, 6, 9, 12. That's 4, 4. Yep. So these are 4. These are 4, 4. The 4x multiple apart. That's fine. Would I trade any lower? No. No, because there's too much, too many false breaks. Too many false breaks at these time frames. So at least this is what I know. This is what I've seen in my last 5-6 years trading the markets. Yeah, I've been trading since 2020. So at these levels, too many false breaks. So we don't want to be thinking about lower time frames. We also don't want to be thinking too high, because then you're not going to get enough frequency. So you want to find that sweet spot. So it's going to come down between a balance of like having enough fundamental analysis and then technicals to support. But I still lean heavily towards technical, because it's like, I feel like, or from what I've seen is that, yes, fundamental analysis is a leading indicator, but what I've also seen too is that like the price action basically like tells that story. It tells all possible stories between the actual candlestick that has formed and the volume that is also printed. It tells that story. So, that's where I am with that. But yeah, I like these two. I like what I did here. Now it's just a matter of it's just now letting the subconscious mind, the DMN, like really think about like, okay, how we're going to do this now, and letting it get to a point where, what's the right word I'm looking for? Like, I want to get to a point where I can see, before I trade real money again, if this setup, or if this trading system can give me enough, number one, positive expectancy and enough frequency so that I can position size. That's the main game right there, is position sizing. All right, well, I'll see what happens. I'll keep it here just for entertainment purposes for me, but also study and research purposes. But either way, let's get to work here. Look at that. Still not enough supporting volume. So we're not going to still take the trade. So that's 2.74 to 2.73. Yeah, and that's exactly why too. That's exactly why too. Like I want to have something where it's just like take the trade and just be done with it. Just take the trade and be done with it, and just set and forget and move on to the next one. Because I'm not going to be waiting here on one market. I'm not going to wait here on one market. So this is where I am. All right, now notice how now it looks like price is getting ready to break out. But look at the volume. Look at that volume. Nowhere near. Nowhere near. Yeah, exactly. 2.74. 2.73 is not the same thing. If this was 2.74 and this was 2.75, yes, because that's stronger volume. But this is not stronger volume. That's why you got to wait for the candle to close. That's the trade. Sell, motherfucker. There you go. 1, 2, 3. All right. So why did I take the trade? More volume, right? But is that enough? You know what I'm saying? Like, is that enough from this point of control? That's why you need more indicators. By that standard, no. But if this was the 382, then look at this. Look what we got here. Strong 382 close from this one. Point of control. Got it. And now we're just waiting. Waiting for the price to go close through. And that's it. Let's see what happens here. And after that, it's going to be it for today. But yeah, I can't be here. I cannot possibly be here. Oh, damn. I cannot possibly be here waiting for an order to go to market and then do the other things. You know what I'm saying? Like, that's where, you know, you really have to understand, are you going to do trading? Or are you going to do content? What are you going to do? For me, I'd rather trade. I'd much rather trade. Like, I get the thing about the media stuff, you know, building a media company and, you know, hopefully your message has something to share with the world that's significantly better than a lot of what's going on there. But yeah, like, I couldn't, man. I could not. You know, because God forbid you say one thing. God forbid you say one thing. So it's a problem. You know, that's where I am with this. Yeah. So if you look over here, that's volume prior retracement. Let me see. This is what Euro JPY. Yeah. Oh, and we already closed out of the box. Okay, cool. So it's already done. Strong enough close. Mm-hmm. 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 Yep. That might be too far in some regards. You still gotta wait for the 4 hour to close regardless. Okay. So far, I think I'm enjoying this one more. It's much simpler. And yeah, even if you take the contrarian approach, you said something like this. Technically, yeah. Technically, your stop loss could be like right here or something. Yeah, that's a long one though. Yep. All right, let's go to back to the book. Break.
Yeah. Okay, getting back to this trade right here. If you notice the blue box, the point of control, this is the Dollars box breakout. Price is spending more time to the downside. So this also is supporting my thesis that we're moving down to the downside. But also we've got the 4 hour to consider and to think about the close. So we always want to go in the direction of that 4 hour regardless. Or the higher time frame, which is, sorry, in this case, the 1 hour. 1 hour. The 1 hour for this particular setup. Okay, so see the trade has gone against us. For some reason, it seems that I'm still in the trade. How's that possible? Yeah, close it up. All right, so there we go. This is gonna happen, accept it for what it is. There was more volume. And then all of a sudden this comes in, maybe a deep retracement or some shit. I don't know. Yeah, or maybe you take out this high too, and then you come back down. It really doesn't matter, But at some point, this is kind of the idea of what I want to be thinking. I want to be thinking from level to level, and then at some point exit the position, and then be done with it and be on my way. Just like over here. Let's see the 2 hour. The 2 hour, nope, it did not close above. That's the thing. Okay, let's see here. How we doing on this one? The 15-minute, yes, that's more accurate. Okay, so yeah, that's the thing about this stuff. Gotta be good to go here on this one. Gotta be good to go. It's a 1 to 15. Oh, sorry, 1 to 1.7. Yep. Weekly's got some good levels, to trade to. And then you take the 4 hour close. That's fine too. Yeah, I like it. We're getting there in terms of the setup. We just got to now refine it a bit, because I don't want to be on one market. I want to be taking multiple trades constantly, over and over and over again. And I want to be able to do a certain amount of trades in a given month. In order to successfully do that, I need to make sure that I have a specific R multiple, the right conditions, the right macroeconomics. But we'll check back in. But this will be it for this trading session for right now. And we'll just wait and see what happens, We'll just wait and see what happens, So let's leave it at that. Trading. Okay, let's go back to the charts. We just finished that last trading book. Done. Good. It's good enough for me. It's good enough for me. All right. Now, let's go up into here. Lock it. Let's open up ChatGPT. I'm going to open up this into the GPT inbox, trading with GPT resources. Yep. Okay. Now, let's go in here and let's take everything. Oop. Nope, we broke out with least volume, less volume. So once again, that could be just stalling right now. Whatever. Come on. Okay. We're uploading all of the information. Break. Cool. All right, so that'll do it for today. We've already now got the knowledge files already set up. Okay. I think this will do it. Let's go over here to ChatGPT. And I just uploaded a couple of knowledge files for the trading OS GPT to see if it can if this is adequate enough here. Okay, now I just finished copying the books that we had talked about, and I've copied the illustrations, and I've uploaded that / re-uploaded that to your knowledge files, period. Do you see everything? Question mark. Can you tell me what knowledge files exist for you? Oh, great. Well, that's going to be probably a pretty good setup anyway. Look over here. Look over here. What's happening? You're taking out this level right here. Yep. That's exactly what you're doing. You're taking out this level right here. Boom. There you go. So 1, 2, 3. Let's see what happens. Very likely to break. Yep. That's weak volume. Weak volume. Weak volume. Weak volume. Yep. So we should be expecting that breakdown to happen. I'm expecting that breakdown to happen. So that's going to be, yeah, but see, that's the thing. You got to wait. You had to wait all this time for this. That's 4 hours. 4 hours for that. That's why you also want to trade the extremes. You want to know when it goes to like here, if it's coming back down, that's when you want to trade. You want to trade here. You want to trade here. You want to trade here to here, here to here. Never in the middle. That's always the key thing. It's always the key thing to keep in mind. And this one is like pretty simple here. Pretty simple here. All right, well, we're expecting our daughter today. So I'm going to finish up this video here. Okay, it might take a minute for the new GPT updates to happen. That's fine though. We have Trade Your Way to Financial Freedom, Trading Beyond the Matrix. Yeah, we got all that. All right, so let's give it a day. Let's finish the video. We got to finish. Let's do the work. And then let's get ready for hanging out with our daughter. All right. All right. That's it for today. That's going to be it for today. Thank you. Done. Yeah. Fairly okay shape. I got to really work on. Oh, here we go. We see some abs here. Not too much. Not too much, but enough. All right, that's it. We're done.